Good morning everyone and welcome back to Morning Markets, where the team from True Potential discuss key events from asset markets over the past 24 hours. Today we'll look at yesterday's equity market performance and comment on what the key drivers were. Across equity markets, returns were varied from the different major indices. In the US, the S&P 500 was up 0.5%, following optimism on the long-awaited US fiscal stimulus package, which has been heavily debated between policymakers over recent months. Yesterday, the Democratic Speaker of the House of Representatives, Nancy Pelosi, who has been back and forth with Treasury Secretary Steve Mnuchin over the deal, said she was optimistic about a possible deal this week, which would be crucial to getting a bill passed by the election day, November the 3rd. As a result, the demand for safe haven assets such as the US Treasuries and the dollar fell. In Europe, returns headed lower for the day. The Euro Stoxx 50 was off -0.5% as coronavirus cases continued to mount, particularly in Germany. In Spain, we saw the Spanish government approve a plan to distribute 5.8 billion euros to regional authorities to help their labour market recover from the COVID pandemic. The news helped push their domestic stock market up just short of 1%. Here in the UK, the FTSE 100 was up only marginally, 0.1% up, as initial gains from the airliners were capped by the concerns over tougher lockdown measures. In what was a relatively quiet day for economic data, there was one data point that did grab my attention. US housing construction increased by 1.9% in September, rebounding from the August decline. The US housing market continues to be one of the key bright spots for the US economy, driven by low interest rates and people migrating to more rural areas in search for more room for home offices and schooling. This is important as a buoyant housing market creates a wealth effect in that homeowners feel wealthier, which means they're more likely to spend and consume, which is important for sustaining economic growth. Today, we've seen UK inflation data for September released. As expected, prices rose by 0.5% in September for the year and by 0.4% over the month. The increase reflects an unwinding of the government's Eat Out to Help Out public scheme, a scheme that suppressed food and services prices in August. Whilst prices are higher, underlying pressures remain muted and still well short below the levels consistent with the Bank of England's 2% inflation target. Overnight in Asia and Japan, stocks rose marginally amid optimism about progress on the US fiscal stimulus talks. In terms of what I'll be watching out for today and the rest of the week, today you have the Bank of England Deputy Governor Dave Ramsden, who will be discussing some of the policy challenges in a post-COVID environment. There's a lot of economic data out tomorrow and Friday in terms of confidence data and economic survey data in manufacturing and services from the various developed countries, which will be very important to see how the pace of the economic recovery is progressing. That's it for today. Please join me tomorrow. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.